looked at Microsoft After Hours, and it's basically unchanged. Whether that feeds through maybe into that stock performance.
So actually, somebody put this question directly to Brian Ozowski on the media call, which is, are they under pressure because of growing competition? In other words, it's not just that the clients are pulling back, it's that clients are looking elsewhere, because as you say, what we learned this week is Alphabet and Google Cloud and Microsoft doing quite well. It was quite a definitive no. I think the way that they put it was, we're not seeing any change in market share or market structure. But, you know, it's a big, largely unpenetrated market for cloud. And for them, AWS has also been impacted by cost controls. So I think the point I'm making is that near-term, real-time impact they're seeing in terms of the growth rate for AWS is a little bit worrying, because it's also an area they trim fat. So if they're not losing market share, why is it that it is decelerating in growth sequentially? And I think I'm right in saying that this was the lowest margins on record for AWS as well, which if you're an investor used to great returns, that's a little worrying.
Ed, why were you counting the number of times they said AI?
Oh, you have a keen eye, Mr. Salamat. Because that's what the theme of the week's been. You know, everyone went so big on AI. You know, Mark Zuckerberg talking about Meta's competency in the field of AI was really interesting. Andy Jassy gave basically a 7-minute answer on what Amazon is doing in the field of artificial intelligence, and it didn't move the needle for the stock. If you look at the history of what Amazon's done around machine learning and building large language models, it's quite long-standing, right? We're all caught up in the hype cycle that started in November of last year around ChatGPT, but to their credit, Amazon's been working for a long time.
And thank you. We're going to go Ed Ludlow, co-host of Bloomberg Technology. This is Bloomberg.
Coming up on Bloomberg Daybreak Asia, the start of the Asian trading day. Wall Street's rally may well find some people emulating it in Asia.
Now your 3-day weather forecast on Bloomberg 1130.
It's going to be a dry night tonight with partly cloudy skies, overnight low temperatures midtown Manhattan around 50 by morning and in the 40s elsewhere. Coming up on Friday, more clouds and sun, a few showers later in the day, high temperature approaching 65. Rain developing later Friday night and periods of rain on Saturday in the 50s. Occasional showers and breezy on Sunday in the 60s. This is Gary Best with your weekend weather forecast on Bloomberg 1130.
Global market news changes in an instant, so don't miss a minute. Listen to Bloomberg 1130 anytime, anywhere around the world on the iHeartRadio app. Tune in, the Bloomberg Business app, and Bloomberg.com.
I'd rather ride a bike with my kids than ride in an ambulance.
I'd rather have a catch with my dog Curtis than catch pneumococcal pneumonia.
If you're 19 or older with certain chronic conditions like heart disease, asthma, or diabetes, you may be at increased risk for pneumococcal pneumonia. Ask your doctor or pharmacist about getting vaccinated with Prevnar 20, pneumococcal 20-valent conjugate vaccine, a Pfizer vaccine that can help protect against pneumococcal pneumonia in just one dose. Learn more at Prevnar20.com. Prevnar 20 is approved for adults to help prevent infections from 20 strains of the bacteria that cause pneumococcal pneumonia. Continued approval may depend on a supportive study. Don't get Prevnar 20 if you've had a severe allergic reaction to the vaccine or its ingredients. Adults with weakened immune systems may have a lower response to the vaccine. The most commonly reported side effect was pain at the injection site. For additional common side effects and full prescribing information, please call 1-855-213-2138 or visit Prevnar20.com.
You wake up every morning with Bloomberg Surveillance. Now get even more with the Bloomberg Surveillance newsletter delivered to your inbox every weekday. This is Lisa Bromoy. Our daily newsletter brings you in-depth market analysis, the charts we discussed in the show, plus the best on-air moments you may have missed with Tom Keene, Jonathan Farrow, and me. Sign up for the Bloomberg Surveillance newsletter today at Bloomberg.com/surveillance. That's Bloomberg.com/surveillance. Join Bloomberg Live in New York on May 4th for Bloomberg's Intelligent Automation Briefing about transformation in a time of uncertainty. During this special evening event, top business and IT executives will gather to explore ways in which intelligent automation can offset economic pressures and help organizations thrive by enhancing operational efficiencies and stakeholder value. This program is proudly sponsored by IBM. Register at BloombergLive.com/automation/radio.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Surveillance Podcast, a conversation with Lindsay Piegza of Stifel on America's economic growth. For business people listening here, the animal spirit of the country, overlay that, say, 2% real GDP or less, is this nominal GDP decline from the pandemic in place where we get a 4% top-line GDP?
Absolutely. 2% real plus 2% inflation, there's our 4% nominal GDP. And I do think that that's a realistic expectation. Without a significant growth in productivity, we're going to struggle to see a real rate of activity above 2% for quite some time.
So this is really the conundrum that markets have been struggling with. And this is sort of, you want it to be good, but not too good because of the Fed comes into play. And right now we're pricing in a 4.2% Fed funds rate come January of next year. Is that consistent with what's required to bring down inflation, given the economy you just portrayed?
No, it's certainly not. We know from historical cycles, that the Fed is going to need to raise rates above that peak level of inflation. And so, as we've long advocated, the Fed is likely to need total policy firming to get up near 6%. Now, I'll concede that if we see tighter credit conditions do some of the Fed's work and pull down inflation faster, then maybe the Fed doesn't need to raise rates quite as high if that total policy firming reflects additional rate hikes as well as an organic change to conditions. But right now, we're not seeing that organic change. And with inflation where it is and a solid level of activity both in the consumer and the broader economy, the Fed needs to continue to move forward, raising rates to tame inflation.
Hear the full conversation on the latest edition of the Bloomberg Surveillance Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. Market, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
6:55 on Wall Street. I'm Doug Krisner in New York, and we check markets for you throughout the day here on Bloomberg. It's the Friday session in Asia. We'll have a BOJ meeting later today. Stateside, quite the rally in the equity market, even though Treasury yields were at higher levels. Communication stocks were up in full force thanks to the strong earnings that we were talking about late yesterday from Meta and today from Comcast. Meta shares rallied more than 14% in the regular session. Comcast jumped 10%. So we had the S&P rising 2% today. NASDAQ comp up nearly 2.5%. Dow Industrial Average ahead by more than 1.5%. Now, in terms of the eco data, the initial read on first quarter GDP disappointing, with growth at an annualized rate of 1.1%. However, what was troubling here is that inflation remains stubbornly high. The Fed's preferred core gauge of prices, which excludes food and energy, it was up 4.9% in Q1. That is the quickest pace of the year. So we had yields higher today on the notion that maybe persistent inflation will restrain the Fed from cutting rates as soon as the market had been expecting. The 2-year was up 11 basis points today to 4.06%. After the bell, we heard from Amazon surprisingly strong results for the cloud computing division in terms of revenue, but sales for the current quarter seem to be slowing in a meaningful way, about 5% below what we saw for Q1 so far in the month of April, I should say, and the stock is down by around 2.6% right now in the late U.S. session. More on markets on the other side of the top of the hour. Let's get to Hong Kong. Brian is there for the media review. Brian?
Thanks very much, Doug. Here's an interesting one from the Post here in Hong Kong, that Argentina is set to follow Brazil and start paying for Chinese imports in yuan rather than U.S. dollars. Argentina will pay for some $1.04 billion of Chinese imports in April in the Chinese currency. The yuan has, according to Bloomberg, surpassed the U.S. dollar for the first time in cross-border transaction in China amid increasing de-dollarization efforts. And so it seems that Latin America is a real battleground for this. And an opinion here in the Washington Post that President Biden's economic diplomacy push with China is high risk and low reward. So this is written by Josh Rogan, and he says as the president kicks off his re-election campaign, he's doubling down on his push for economic engagement with Beijing. Seeking such dialogue makes political sense, but it risks lifting U.S. pressure on China without achieving real gains in return. And another one here in the FCMP, and you wonder whether or not this is bordering on crisis, looking at jobs for graduating university students. With more than 11.5 million university students set to graduate this year, China's surveyed jobless rate for 16 to 24-year-olds rose to 19.6% in March. And so this piece in the newspaper is all about jobs, and China in search now of a new arsenal to try to create fresh vacancies for its graduates. The State Council has rolled out some 15 measures to address its weak job market, and this comes as the post-COVID economic recovery is somewhat uneven. Pockets of strength, but also some areas of weakness. 1 minute here before the top of the hour. Brian Curtis and Rashad Salamat. Rich, what are you looking at?
Well, today, of course, it's BOJ Day. Bank of Japan out with interest rate decision. Of course, no change expected. They've got a new governor there, Kazuo Ueda, and he's already as much flagged that they won't be doing anything in terms of yield curve control. But just to say that we do, before that, in just about, half an hour from now, we get Tokyo inflation figures, retail sales numbers coming out for the whole country as well, expected to have seen a gain of about 6.5%, as well as industrial production. So a veritable avalanche of news for the Bank of Japan to be considering as they enter the second day of that meeting.
As we have in our story, too, that given the surprises we got from Haruhiko Kuroda in the past, the traders will be on edge today, just wondering what Mr. Ueda might have to say. Next hour of Bloomberg Daybreak.